Here you'll see the things here talk about non-capitalized interest and capitalized interest on fixed deposit. And if you turn around, they're also going to do it with the loan. So I just quickly want to make sure that you understand the concept that they are talking about. Okay, now let's talk fixed deposit. So if I make a fixed deposit, am I going to earn interest on that fixed deposit? Yes. Okay, so now let's say I make a fixed deposit of 10,000. This is an asset. Okay. Now, I am definitely going to earn interest on the fixed deposit. Okay. Now, let's say I earn 1,000 rand interest on that. Okay. I'm not going to do calculations now. I just want you to get the principle of this. Now, there's two things that they can do. Okay. The first one is they say interest is not capitalized. Now the word capitalized means it doesn't become part of the original. Can I quickly ask, how many of you have got economics? Okay, have you already done things where they talk about per capita? Okay, let me explain that to you. Okay? So in Latin, capita is your head. This is your capita. Okay? So in other words, if they say it's per capita, they mean it's per person. Okay? So that's where they get this from. And what is the most important thing on your body? It's your head. Without your head, you cannot function. Okay? You've seen people without arms, people without legs, but you've never seen people walking around without a head. Okay? Why? What's inside your head? Your brain. Okay. Now, long story short, when they talk capital, they talk the main thing that keeps this going. Okay? So now, if I look at fixed deposits, and I look at interest on fixed deposit, what keeps the interest on fixed deposit going? The fact that I have a fixed deposit. So what is the most important thing here? It's the fixed deposit. So when we talk about that 10,000 there, we talk about the capital amount. Now you have to get out of your head that thing where capital is only when we give money to the business. Okay? The word capital actually refers to your investment. Okay? So if an owner gives capital to a business, his investment in the business is called capital. Okay? Now, if we give money to a certain account, a fixed deposit, my investment that I make is called my capital that I put in there. That's my investment because it's going to give me a return. If I say it's going to give me a return, what is it going to give me? It's going to give me interest. Okay. So, now I want to ask you, if you look at these two accounts, which one is the capital account? The fixed deposit. This is the head. Without this, we can't have this. Okay. So basically, if they say this is not capitalized, it means we're not going to take it to the original amount. We're going to take it to bank. So in bank, I will put the 1,000. So I'm going to get the cash and I can go spend it. Okay, that's if it's not capitalized. Right. Yeah. So now if it's not capitalized, usually what arrangement we make is that it's paid to us monthly. So every month you get, say, 100 rand. So that's why whenever I have a dream about winning the lotto, I always think, okay, I'm going to put at least 90% of that lotto money in a fixed deposit, and then I live from the interest. Would that interest be capitalized? No. I am making an arrangement that that money is paid directly to me. It's not reinvested. Okay. What's the other option? The other option is that interest is capitalized. Okay. Now, if interest is capitalized, it means I'm going to make it part of the original. So I take it there. You see? So now my investment is 11,000. So with that is how I get my investment to grow. Ne? Can you see, if I took the 1,000 interest for myself every time, the investment is going to stay on 10,000, and my interest will only change if the percentage according to the market, remember it's market related, if the interest rate stays the same. You get that? You get it? Okay? But if I reinvest, or if I capitalize the interest, my investment is now growing. Okay? So can you see next year it will be, the interest may be 1,100. Okay, and that is when they will say the fixed deposit with interest matured. So it's basically about a choice. And the choice is, am I going to take the interest every month or every year? And then when the fixed deposit matured, I only get the 10,000 back? Or am I going to reinvest it, capitalize it, every time they want to pay out, they actually pay it into my fixed deposit, and then when it matures, I get 11 back. The original amount plus the interest that I capitalized. Does that make sense? I saw two hands. Let me quickly ask that now. So in other words, can you see, I'll be with you now, can you see that with both options, there's an interest on fixed deposit? Can you see what? That one is constant. So in my income statement, I will put interest income 1,000. This doesn't change in the income statement. Where is the difference? In the balance sheet. Because if I didn't capitalize it, it will influence my bank, ne? And my fixed deposit will be the same. But if I did capitalize it, I need to add it to the fixed deposit. Can you see it's only the fixed deposit or the bank that is influenced, not the interest. Okay, is everybody sharp? Question? So now the other thing that happens is they will say to you, there is still interest outstanding. So let's say I say to you, my interest on fixed deposit, I'm using exactly the same information. I just say now to you, okay, the fixed deposit has an interest of 11% per annum, right? So what do you see now? Oh, I already calculated the 1,000. So if it was capitalized, I already added it to the fixed deposit. If it was not capitalized, I would have received it. Doesn't matter. But now let's just work and say, oh, let's say the interest was supposed to be closed off to profit and loss, my income statement, as 1,100. Can you now see there's 100 Rand short here? Can you see that? And now once again, what goes to your income statement? The 1,100. What goes to your balance sheet? Remember, this is already recorded, ne? So you only need to record the 100. Where will you record it? If it's capitalized, you will take it to the fixed deposit. If it's not capitalized, you will not take it to bank because you've not received it. Where will you take it? Receivables. Ne? You will say accrued income, 100. Okay, you guys got it. So literally in your income statement, it doesn't matter if you capitalize or not. It's in your balance sheet, it matters where you're going to show it. Okay, so if there's a amount outstanding on the interest on fixed deposit, if it's capitalized, you add it to your fixed deposit. If it's not capitalized, you add it to accrued income, receivables. Sure. Okay, let's go on. So now if I look at this here. So now this is what is explained here. You can go read through it at home. Okay. So this is now the loan. I first did the fixed deposit. So on page 2 is the fixed deposit. So can you see there? It's the not capitalized. Can you see if I short, I show it as a accrued income. Okay? Here, if it's reinvested or capitalized, I will add it to the fixed deposit. You see? Okay. Is everybody sure? Who says no? Can I talk? Everybody fine? Yeah. So you're asking, we don't add it to bank, we add it to accrued income. You're going to read your adjustment. Now the fact that it's an adjustment means that if I did receive during the year, I have already put it in the bank. It's already in the bank. So meaning this is just the amount that they still owe me. Okay. Because usually we are doing now adjustments. And adjustments is usually they still owe me. Okay. Is everybody sure? Remember, if the bank pays me interest, on what document will it show? What's my source document if the bank does something? Remember, they're going to pay it into my account directly. So if I look at my bank statement, it's already there. So I'm going to have to, when I do my bank recon, I'm going to put it in the bank, in the CRJ.